I think, this is just one person's opinion, being an 8-state operator with an excellent balance sheet and excellent financial discipline, we at Ayr are uniquely positioned because we won't have massive overlap to be able to slingshot from an 8-state operator to one of the top operators.
Jonathan Sandelman joins me now. He's the CEO of Ayr Wellness Inc. Trades on the OTC under the symbol AYRWF and in Canada under the symbol AYR.A. Jonathan, welcome.
Well, thanks for inviting me this morning.
You bet. Jonathan, let's start with an overview. What is the business of Ayr?
Ayr is a multi-state operator focused solely on the U.S. We're in 8 states, and we're thought to be, because of our previous backgrounds, some of the best operators as well as the most disciplined financial people in this industry.
Mm-hmm. Okay, so tell me about how Ayr came to market. You've got a bit of an interesting history there.
So in 2017, I started to focus on the cannabis industry because it was shown to my family office, which I manage. Initially, when the idea of investing in cannabis was shown to me, I wasn't very focused on it. And after 30 years of being a Wall Street veteran and a hedge fund manager, I've learned simple lessons in life that most of you probably already know, but took me 30 years. That if I stay simply in my core competency and focus on the things that I'm good at, I tend to do well at. And when I get distracted with subject matter or investment ideas that are not core to my competency, I tend to do poorly at. So when cannabis was suggested to me as an investable asset, my initial reaction was not a core competency. I really knew nothing about the market. But what's helpful to me generally in life is when people do suggest ideas to me, because then I tend to start to focus and get educated. My typical investment style is to do a tremendous amount of research because I'm a very disciplined investor, and I've been, throughout the 30 years, a good steward of capital, and I've driven shareholder returns. So I did the work. It became super interesting to me because I saw the Canadian market do extremely well. I compared those values to the U.S. values, and the U.S. values seemed incredibly cheap, relatively speaking. And then I asked the question, why? Simply because an asset is cheap doesn't necessarily mean I invest in it. I have to understand what is creating the cheapness and whether there's catalysts to change that asset from cheap to rich. And in this case, Jeff Sessions, who was our former Attorney General, was threatening people who invested in U.S. cannabis. But the reality was, if you looked at his budget, he didn't really have the budget to go aggressively against U.S. cannabis. He could only talk to it. So I called it simply the regulatory misperception arm. There was a perception he could put us all away. He actually didn't have the ability to do that. Therefore, the U.S. assets, in my mind, were artificially depressed, and that I should focus on it and start buying those assets. Now, you got to pick your horse, right? You got to pick the vehicle by which you do that, because that's what I've done my whole life. And what I determined is to use the SPAC vehicle. And if your investors are less familiar with that, I can go into about a 30-second description of that. You tell me. But I thought the SPAC was the best way to do it for several reasons. No one had ever used a SPAC in cannabis before, but I've been a financial engineer my whole life and understood that the math that's embedded in that would be the best way for shareholders to make money. So went up to Canada, said it to the investment bankers, I want to sell in Canada, basically doing an arbitrage, right? Sell into the rich, enthusiastic market that was going on in Canada at the time to buy those depressed assets in the US, just a simple relative value trade.
We are familiar with SPACs, and our experience with SPACs is that, well, the experience of the whole cannabis sector now, relatively speaking, over the last couple of years, is one where we're riding yet another wave of discounting going on, a revaluation to the downside. Part of that arguably stems from the lack of definitive moves by the Biden administration toward the decriminalization federally, towards a national program of regulation of cannabis. But Ayr Wellness is generally recognized as one of the largest scale cultivators in the US. So how does this downturn affect shareholders in a company that was a SPAC previously relative to participants in other structures that might have not been so well capitalized at a cost per share basis in the early structure?
The interesting thing about my original business case when I entered the market, because I'm a finance person and understand financial discipline, what I told the investors while I was raising the money, that I'd be EBITDA and cash flow positive day one. Because I understood, remember the enthusiasm back in 18, right? The market was just charging up every day, right? But you and I know, and your investors know, that the markets don't simply go from the left quadrant to the right quadrant in a straight line, that the markets do correct. And if you don't have EBITDA and cash flow, when those markets do correct and access to capital gets tight, which is occurring right now, okay, prior to Friday's rally, access to capital is getting much more limited for the best, most disciplined operators in the industry, which if you're on the right side, buying the right companies, the idea of consolidation, which we all knew was going to happen at some point, has been pulled forward by at least a year, if not more. So the way we think about it, the cohort of investable companies is shrinking. And therefore, most companies will become uninvestable because they won't be able to sell stock because the market is down in equity, and they won't be able to raise large-scale capitals to continue to build out their businesses. And so if you lack the original premise that I spoke about, being EBITDA and cash flow positive, you probably today are outside the cohort that has access to capital, and therefore we're at the moment you're either an acquirer or you're the acquired.
Right. That's both an opportunity for you as well as a sort of evolving benefit to the shareholders of Ayr.
I built this company for this day. Okay. Again, we talked about it day one. Well, everyone was over their skis when I was EBITDA and cash flow positive. The market did correct, and we had Cannabis 2.0. And I did 13 transactions after waiting 13 months after the original 5 companies, because the market came our way, because we saw the lack of discipline in people's balance sheets and how aggressive they were and how they would need capital and they would have to fund themselves when the market turned down, which is not when you want to do it. I think we're at a very similar time today where maybe 5 companies become the acquirers and the rest get acquired.
Wow.
Now, the issue, though, a lot of the larger companies have a very large footprint already. So the overlap between one company and another is so overwhelming because many states restrict how many licenses you can have, that a lot of the largest players will have difficulty taking advantage of the lack of liquidity and the consolidation that will occur. I think, this is just one person's opinion, being an 8-state operator with an excellent balance sheet and excellent financial discipline. We at Ayr are uniquely positioned because we won't have massive overlap to be able to slingshot from an 8-state operator to one of the top operators. So luck is by design. You always need to be lucky. But because we stayed on our vision, our discipline, and because the markets got pulled forward in terms of when consolidation was going to occur, and it always was going to occur, we get fortunate to be in this position, and so do the Ayr shareholders.
Interesting. So then does the patchwork regulation of the state by state that sort of precludes the ability to conduct interstate commerce as a result of the lack of a national policy, does that benefit a company like Ayr, or is that an impedance? And are you sort of waiting for the day with bated breath that there is a national strategy?
Well, if we think about national strategy, let's start in the beginning. That can't occur until cannabis is no longer a Scheduled I drug. Does any of your listeners really believe that cannabis and heroin are equally as dangerous?
I wouldn't think so.
Right. So there's several things that our politicians need to do and our society needs to do to reschedule this drug, right? Reevaluate our policy on the war on crime. Make it so that this once in a lifetime land grab to build one of the great CPG industries is shared by more than a handful of people. So there's a lot we have to do before we even start to think about interstate commerce. And that's what we're focused on. You know, I hear my competitors sometimes talk about, oh, the top 5, there's a moat around us and we're the winners forward. And, you know, I used to listen to that. And then as I heard it more and more often, I started to actually get upset by that. And not because maybe at that time we were outside the top 5, which you don't know me well, I'm an insanely competitive person, but it's because I don't like the sound of the word moat. At Ayr, we don't build moats. We build bridges. And we don't want this to be a land grab. There's too many people in this society that have been disadvantaged by this drug and now shouldn't be on the outside and be able to benefit again from this insanely interesting high growth industry. You know, I laugh to myself, and I said this in an investor call the other day. In Nevada, at the real heights of COVID, there's 25% unemployment, yet our stores growth, retail growth was growing. And remember, our folks, our patients, our customers can't use their credit card. They have to pay cash. So I was thinking to myself, 25% unemployment, retail sales growing. What is occurring here? How are they able to do it? And the fact is, do you think people stop buying cannabis to pay their cellular phone bills? Do you think people stop using cannabis to pay their cable bills? It may be that during that period of time, the customers were turning off their cable or cellular to come in our stores because of the anxiety that was happening in society at that time because of COVID. So when I think about cannabis as an opportunity, yes, I miss cable. Yes, I miss investing in the internet, right? Yes, I missed the investment in cellular. But maybe it turns out that cannabis is bigger than all of those 3. And maybe it is the single best growth industry of our lifetime.
Wow. Well, that's really intriguing, Jonathan. I would love to spend more time talking to you, but we're out of time today. I really appreciate your participation, and I look forward to talking to you again in the future. Thank you so much for your time today.
Thank you. Have a good day.
Thank you. You bet. Bye for now.